Okay, if you've been keeping an eye on the precious metals market, you've seen something wild happening, a truly historic surge. But that official story you're hearing about solar panels and EVs, let me tell you, that is just the tiny tip of the iceberg. Today, we are going to dig into the powerful, hidden forces that are really lighting a fire under this rally. Take a look at this number. This is the all-time high silver, just blasted through. And gold is right there with it, just shattering records. Now, a move this big, this fast, it doesn't just happen. It's a signal that something huge is going on behind the curtain, something the mainstream market is completely missing. So the question is, what is it? If you flip on the financial news, they've got a neat, tidy little story for you. They'll tell you this is all just about industrial demand. Silver for solar panels, this component for that electric vehicle. It's a simple, happy story about a healthy market. And look, that part's not wrong. But it is not the whole story, not even close. The real driver here is something much, much bigger. Yeah, see, this isn't about some gradual industrial trend. The real story here is about a potential financial shockwave, a massive, completely unplanned liability that could literally force the U.S. Treasury to come up with $200 billion and fast. And that is the kind of event that makes smart money move before anyone else even knows what's happening. So, to really get what's going on, we have to look at the first major clue. And that clue is this growing, gaping chasm between the price of paper contracts for silver and the price for the actual physical metal you can hold in your hand. A massive physical squeeze is happening right now. I mean, just look at this price difference. While silver is being priced around $88 an ounce in New York, it's trading for over $98 in Shanghai, a $10 premium. That is unheard of. This isn't just some small discrepancy, folks. It is a giant red flag that physical metal is being vacuumed out of Western vaults and shipped east as fast as they can move it. And don't think this is just a few traders playing games to profit from those price gaps. No way. On the COMEX, the main U.S. futures exchange, the number of buyers stepping up and demanding actual physical delivery of silver is already 3 times higher than it was in previous years. It is a crystal clear signal that big investors don't just want a paper promise anymore. They want the real thing. And this demand is popping up everywhere. It's not just high-level finance in Shanghai. It's regular investors buying from the U.S. Mint who sold out of their new coins on day one. We're seeing a coordinated, global rush for physical metal. The shelves are emptying. Which brings us to the real question. Why now? What do they know? And that right there, that question, it brings us to the next layer of this whole story. This mad dash for hard assets is not random. It's a calculated hedge against some pretty serious cracks that are starting to show in the financial system itself. There is a huge, unexpected event looming on the horizon that could put immense, and I mean immense, pressure on the US dollar. So this is it. This is the event I mentioned earlier, what some analysts are calling a fiscal shock. Right now, there is a case in front of the Supreme Court, and it argues that certain tariffs put in place a few years back were actually unconstitutional. Now, if the court agrees, the only legal fix is for the Treasury to refund every single dollar it collected, plus interest. We are talking about a sudden, out-of-the-blue $200 billion liability hitting the books. So, how does this actually play out? Well, a court-ordered refund isn't a normal line item in the budget. The Treasury would have to find that cash, like, yesterday. The only way to do that is to issue $200 billion in new debt. But think about it. When you suddenly flood the market with unexpected debt, one of 2 things has to happen. Either interest rates spike to attract buyers, or the Federal Reserve has to fire up the printing presses to buy it all up. Either outcome hammers the value of the dollar, which is exactly why smart investors are preemptively moving into hard assets. And here's the kicker. That $200 billion shock isn't happening in some healthy, stable system. No, it's hitting a system that is already carrying over $36 trillion in national debt. Adding an unexpected bombshell like this to an already stressed-out system, well, it's like throwing gasoline on a fire. It just dramatically dials up the risk and the fragility of the entire structure. We've seen a setup like this before. It feels a lot like the 1970s, that whole decade of stagflation, right? High inflation, slow growth, and a government totally trapped. In that environment of deep monetary uncertainty, silver went on one of the most legendary runs in history, from $1.50 to $50 an ounce. The parallels to what's happening today, they're pretty hard to ignore. Okay, so now let's zoom out. Let's pull the camera way, way back, because this isn't just about one court case or one country's debt. The physical squeeze and this looming fiscal shock, they are happening against the backdrop of a monumental geopolitical shift. I'm talking about a fundamental rewiring of the entire global monetary system. If you look at history, every global reserve currency has followed this exact same four-stage pattern. First, dominance. Then, the host nation overextends itself, runs up massive debts. Sound familiar? Then comes stage 3. That's when other countries start building their own alternative systems to get around that dominant currency. And that, right there, is exactly where we are right now. And this is not some future prediction. It's happening in real time. The 50-year-old deal that basically forced Saudi Arabia to sell its oil only in US dollars, it just expired. The BRICS nations, we're talking Brazil, Russia, China, India, and more, they're expanding and building their own payment systems. The world is actively and very openly building a post-dollar infrastructure. So where does all this leave us? We've got a short-term physical squeeze happening, we've got a medium-term financial risk with this fiscal shock, and we've got a long-term tectonic geopolitical shift underway. When you put all three of those pieces together, you get a very clear picture of why the precious metals markets are moving so violently. The key thing to understand here is that this isn't just one thing. It's a perfect storm. You've got a short-term physical squeeze that's basically breaking the paper market, a medium-term fiscal shock that's exposing deep systemic weakness, and a long-term geopolitical shift that is bringing a 50-year-old monetary system to an end. All three of these massive forces are converging right now. So what we're all witnessing is way more than just another market rally. It's a fundamental repricing of risk as the financial world transitions from one era into the next. The system that has defined the global economy for decades is changing right before our eyes. And the real question that these market moves are asking is this: are you ready for what comes next?